Away from the oil and gas scene, gold prices jumped more than 1% on Thursday on bargain buying, a day after the bullion hit a one-week low amid optimism over the U.S.-China trade deal. So we see it's a reverse of what we had about this time yesterday. 1.5% up. That's what we have for spot gold, but it hasn't gone back to the 3,005, which is the new record high that it had hit. So it's at $3,335.39 per ounce. U.S. gold is also 1.5% in the green, $3,344. Spot silver is on the flip side. It's down more than 0.5%. 33.33, that's $3.33. Platinum is down 0.4% at $968.60 per ounce, and palladium is down almost 1%, that's 0.8%. At $936.63 per ounce. U.S. Treasury Secretary Scott Bessent has said that the excessive high tariff between the U.S. and China are unsustainable and must reduce before trade negotiations can proceed. But President Donald Trump would not unilaterally cut tariffs on Chinese imports. And of course, we are still waiting for response or reaction from China on this. Also, the dollar index fell 0.3%. As we know, relationship between gold and the dollar index is always inverse. Now, let's talk about gold some more. We've seen some very impressive movement. Unfortunately, not for very good reasons. Uncertainty in the global economy around tariff, trade, and all drove investors to the gold scene. But what does all of this mean for sustainability of the price? Can we see gold come back to 3,005? I wonder. Let's have analysts from financial derivatives company Toju Megison. Hi, Toju. Welcome to the program.
Morning, Vinny. Thanks for having me.
Great. So we've seen this impressive movement in gold, even though we see it dropping now because there's seems to be stability between China and the U.S. But talking about sustainability of the price, what does it look like from where FDC is?
Any a key point you mentioned will be the fact that, again, the inverse relationship between gold and the U.S. dollar. The stronger the U.S. dollar, this suppresses the value for gold, and vice versa. The weaker the U.S. dollar, it drives up the price for gold. Now, we've been recently seeing higher price levels of gold in the past, couple months. I know since mid-November, the percentage increase in the price of gold has gone up by 26%. It's actually the highest it's ever been since 1980. Now, we're backdating to 3 years ago, where I feel this trend started to arise was due to the fact that the U.S. had imposed sanctions in Russia. And these sanctions, obviously, they imposed the sanctions on Russia due to the invasion of Ukraine. And these sanctions created geopolitical issues and uncertainty, leading investors to flock towards gold as a safe haven, because gold is an asset which tends to stay stable in the midst of crisis, actually. Additionally to that, the U.S. actually specifically targeted Russia's gold reserves specifically, in order to hinder Russia from using its gold to fund the war against Ukraine. So ultimately, that had led to I lost my train of thought there. But ultimately, yes, we would see overall, we would see the price of gold increase as there is geopolitical issues and uncertainty, as well as the structural demand for gold. Although, however, we could see if U.S. interest rates should rise up and the inflationary rates should drop drastically, then we would see the appeal for gold actually diminish, leading to the reduction in price.
All right. So we've seen, apart from investors taking a hedge where gold is. We've also seen central banks, institutional investors also going that way, especially now with the drop in the dollar index. Sentiments around President Trump hasn't been so great in the last couple of months. Do we see a continuous increase in the demand of gold, from what you've heard?
Most definitely, we would see that central banks are still very much have a strong demand for gold, due to the fact that countries are looking for ways to divert away from the U.S. dollar, to de-dollarize the dollar actually, and the implications this has would help the. Hello.
I can hear you, so please go ahead.
So the dollarization of the dollar, this would help obviously improve the price of and the demand for gold. Again, looking at the forecast and the low forecast for the price of gold, this will encourage buyers to delay their purchase in hopes of anticipating a better entry to buying gold as the prices continue to fall. So yes, there's going to be a retained demand for gold for sure.
All right, so Jumegasin, for analyst with Financial Derivatives Company, thank you so much for your time.
Thank you.